You know, that eerie calm right before everything blows up, like when you get back with a toxic ex and they're saying all the right things and they're doing all the right things and they're love bombing you, and you think, oh my God, maybe everything can be different this time, until everything just blows up in your face, because the house always offers champagne right before the trap is set. And this is exactly what the stock market's doing right now. We have the S&P 500 reaching new all-time highs, but when you look at the greed and fear index, which is basically a mood tracker for the stock market, and it's going to tell you if investors are acting out of fear or greed. When it's showing fear, it means people are scared. It means prices are dropping. That's when things go on sale. But when it's showing greed, like it is right now, it means people are piling in, they are chasing gains, and they are convinced that the market will only go up. If you follow me, then you know that the market moves in cycles. It will never only always go up. Now, that doesn't have to be a bad thing if you know what to do, but there's another signal flashing called the put to call ratio. Basically, it tracks how many people are buying like insurance on their stocks versus betting on more growth. And lately, almost no one is protecting themselves. It's like the market feels too safe. And when everybody feels safe at the same time, that's when people get blindsided. If you look at the price of stocks, they are sky high. They are way more expensive than usual. And this is built on the belief that companies are going to make a lot more money. It's like paying $1,500 a night for an Airbnb that says that they have ocean views, but when you look at the pictures, all you're seeing is a parking lot. People start overpaying based on hope. That's when reality hits hard. What makes it even riskier is like, what's happening with tariffs? People are betting that they're not going to happen because they say Trump always chickens out. But what if he doesn't? And we have a Fed meeting this week. Are they going to cut interest rates? If they cut interest rates, does that mean that something's already broke? Because usually it does. The market has been pricing in good news, and not only good news, but just news that's like not as bad as they hoped it would be. So what do you do with this information? I mean, nobody has a crystal ball. Nobody knows if we're seeing a drop in the near term, but we do know that markets move in cycles. When prices drop, that can be a huge opportunity. Remember the saying, be greedy when others are fearful, be fearful when others are greedy. And right now we're seeing a lot of greed. What are wealthy investors doing? What am I doing right now? I'm still investing in small amounts consistently. This is called dollar cost averaging. However, if I see an opportunity like the market drops by 10%, while everybody is running away scared, I'm putting more money in. If the market drops by 20%, I put even more in. If I see a 30% drop, you best believe I'm putting in everything that I can find, because corrections and pullbacks are when assets go on sale, meaning you can buy more with less and you can get really friggin' rich. People who get rich don't just believe the headlines, they look at what's happening behind the scenes. And that's how I went from $40,000 in debt to millionaire at 30. If you want to learn what to buy, how to buy your first stock, what accounts to use, go and take my free investing masterclass, link in bio.